right, welcome back, founders. We're here for part 2 of the Gab Lab. This episode is all about tax tips and tactics to navigate our 2020 tax return in conjunction with the COVID benefits that we received last year. So we are joined in the Gab Lab with Brian Quinlan, who is a chartered accountant and contributing editor for Canada Money Savers, correct?
That's right. Money Saver Magazine. Right.
Okay. All right. So there's a lot to this one. We're talking all about our corporation now and the different benefits that we received through COVID. I've asked Brian's permission to just kind of run through all the benefits that were out there, because you might not have recognized them as COVID benefits, but just so that we're clear and we're all on the same page of understanding the alphabet of COVID benefits that were available to
letters,
us.
Yeah.
Yeah. So we had CEBA, right? The Canadian Emergency Business Account that was set up. And it's my understanding that was up to $60,000.
It started at 40.
Started at 40.
40. And now in late fall, they raised it, they can get another 20. So now it's at 60, yes.
Now it's at 60. Many of the founders that I have talked to, they seem to have accessed those funds on a line of a credit or a Visa credit card.
Yes, okay.
So that was interesting.
And that's because it's all administered, not so much by CRA, but by your bank.
By the bank.
So your business's bank account really does all the work.
Yeah.
I'm sure there's some incentive for them with CRA to do all this, but that's right. So if you had a line of credit with your bank, that 40 or 60,000 may have showed up right against that right away.
Okay. And I know we're going to talk a little bit about some of the forgivable piece of that and when that's due and how that impacts your taxes.
And there's that's a good point. People are forgetting about that part. Okay.
Okay. So remind me to touch on that.
Okay.
We also had the Triple RF Fund, so Community Futures as our episode champion. They have been diligently working around the clock to get this money out. This is the rural relief fund, that recovery fund that was available for entrepreneurs in rural parts of Canada across the country.
Yes. Okay.
We have.
Remember, you're asking a Toronto urban accountant about that, so I don't know if I can give you my 2 cents on that. Okay. All right. Okay.
We had HASCAP. Am I saying that right? Highly Affected Sectors Availability Program. So again, access to money there. We had a loan guarantee that was actually offered by Economic Development Canada, where they were actually guaranteeing 80% of the funds or the loans that you were able to available through financial institutions, up to $6.25 million.
Right.
We had a co-lending situation that was set up with BDC and other financial institutions. Again, $6.25 million. Navigated through those financial institutions, but BDC would help to top up. We had a Block Entrepreneur Loan Fund, anywhere from $25,000 to $250,000, where they could access money there, up to $93 million the government put towards that. Sector support in aquaculture, energy, infrastructure, culture, heritage, sports, so money there. And of course, Indigenous entrepreneurship, $306.8 million available through Aboriginal financial institutions. And this was both short-term interest-free loans and much of it non-repayable contributions. So
right. So lots of incentives. A lot of them don't apply to the everyday entrepreneur on the street kind of thing, but they're all good. And there's no reason you should take advantage of them. So this makes sure you're aware of all the terms to repay, if it has to be repaid, or if it is going to be forgiven. And loan forgiveness is a big deal, which we'll talk about with the CEBA. We can do that now or do that later.
Beautiful.
Or
let's do that. I'll just layer in here. I didn't even touch upon the provincial benefits and programs available. I know you're going to not speak to each province, but again, just what we need to know about our own province. And yes, accessing funds when they're available, but understanding the costs and consequences of accessing that money, right? Okay. So Brian, this is your court. So take it away. Where do we start here?
Well, the first one you mentioned, the CEBA, or Canadian Emergency Business Account, was a very great incentive. So it started off as a $40,000 loan from the government, interest-free, until the end of 2022. So the idea of this loan was for you to keep your business open. It's to cover all your expenses, from rent to buying inventory to keeping your employees on payroll, all that kind of thing. And remember, it's not a subsidy, it's a loan. But the advantage of that is when it came out, 10,000 of the 40,000 and now 20,000 of the 60,000 can be forgiven by the government if you pay it back before the end of 2022.
Can I just repeat that?
Oh, yes, sorry, that's a lot of
10,000 of the 40. So when it first came out, 10,000 was forgivable if it was repaid by a specific date.
Yeah.
And now when they topped it up to the 60, now 20,000 is forgivable if we.
That's right. So if you borrowed 60,000, 20,000 is potentially forgivable if you pay it back on time. And so that's what most people plan to do is make sure they have the money. The first 40,000 by the end of 2022 is to repay. So you're going to repay effectively 30 because 10 will be forgiven. So that's it's been interest free. So I would make sure you plan to have that money available there. And if you don't, that's okay too. The government won't forgive anything, but they will turn it into, I think it's a 5% term loan. So you don't have to pay it back by the end of 2022. There's an incentive there to have some forgiven. But let's say you just don't have the 40,000 come the end of 2022. It just turns into an interest-bearing loan.
Okay. So a question on that from the lessons that you shared with me in the personal tax. If we repay that $10,000, if we repaid it, oh no, sorry, we're talking about corporate tax now.
Okay.
So their fiscal year, right? Does that impact if they repay it within the fiscal year? Are they only getting taxed on the amount of money that they received minus what they repaid?
Again, it's not taxed at all because it's a loan. So if you most people took the loan of 40,000 out last spring. Now it's at 60,000 as of the end of the year. So it's a loan. So it doesn't hit your income statement. But there's the rub. It does. Because how our income tax works, if you receive a loan which is potentially forgivable, it goes into income. So for the clients we dealt with, if they received $40,000, we had to take 10,000 into income this year, even though we don't know if it truly will be forgiven. Okay. Of course, if it's not forgiven because they can't pay it back, we'd get a deduction then. So 10,000 of the 40 you received, or 20 of the 60,000 you received, is taxable. Okay. Whenever you received it. So if your year end was December 31st and you got 60,000 by the end of December, 20,000 would be in your income and you'd have a debt on your balance sheet of due to CEBA repayment of 40. So 10 would be on your income statement, 40 would still be as a liability. So that's what a lot of people are missing. This applies to corporations or people who get a CEBA if you run a corporation, as long as you were running a business.
So this is going to apply to both incorporated businesses, non-incorporated businesses that are sole proprietorships. Yep. The important message in this is that if that money, whatever portion is forgivable, and we ran through a whole bunch of programs there that where some of that money was forgivable, that is going to be taxable. So set that money aside now.
It's right away, it's taxable. We don't have to wait till 2022 when it isn't legally forgiven. That's a bit frustrating. That's how the Income Tax Act works.
Okay. So super important. All right. So thank you for sharing that. So that is CEBA. And, I was looking at my notes and I know people are going to ask questions about the Canadian Emergency Wage Subsidy. We'll get to the whole team and personnel piece after, but is there anything else that we need to know then with any of the money that is coming in to support us operationally outside of our team expenses and employee subsidies?
If you're using it for what if you're using any money for any program for what it's designed for, you're okay. The difficulty some entrepreneurs are having is, can they use the money to pay themselves? So if you're a non-arm's length employee, like you run your business, then you're not considered an arm's length employee. So you can't give yourself a raise. You can't give yourself a bonus. You can't certainly turn around and give yourself a $100,000 dividend. So be very, very careful with any payments to you, the entrepreneur or the owner or anyone that deals non-arm's length with that business. That's the truth. So that's what CRA, the whole thing is designed to be a COVID relief. So paying you more is not a COVID relief. Paying you a dividend is not so much a COVID relief. It's keeping your employees, paying your landlord, getting gas for your delivery trucks, all those things. So be very careful how the money is being used.
Brian, that's a really important point. I can think of a couple founders right now that should be paying close attention to this. And what would
we're seeing that now is coming around dividend T5 time and dividends and things like that. Again, the idea of all these incentives, as we know, was to offset the difficulties of COVID. So it wasn't to enhance the owner's pocket. That's what we have to be very careful.
Okay.
Of, so.
And it's not going to be fair of me to ask you what you speculate the consequence of that would be if CRA was to do an audit to see that that money was being used for personal gain or personal benefit. That's too far reaching, too future forward.
I think there's been some comments. No, it would have to be repaid, and there'd probably be penalties and interest, just like your taxes assessed. So there'd be all that to go with it. We'll talk in a couple of years when these audits start, I guess, perhaps, and see what happens. So
that's a really important point. Thank you for sharing that.
Sure.
Okay. Anything else? We're talking about so interest free. Anything else that we need to know? Sorry, I'm just going through my notes and seeing if anything pops out to me. But
and not with the CEWS. The big thing is to make sure that forgivable portion is included in income. This year, if you receive the CEWS, and controlling how you're using the money. If you ever had to defend, how did you use that $60,000? You want to be able to show that you used it for rent, buying inventory, et cetera, et cetera.
Okay. And anything specifically we need to know about reporting on that money? Is it just your typical tax return that is the reporting process, or were there measures in place where they were looking for additional documentation to be filed quarterly, or no? I'm not familiar with that.
No, nothing at all. I'm not sure what's going to happen at the end of 2022. I know some people we deal with are having difficulty making repayments already. I think that's slowly being set up now. If it's on a line of credit, it's easy to repay. Some people are having difficulties. I think this will all come out in the system definitely by the end of 2022, when that's when the first $10,000 on the $40,000 loan will be forgiven. I'm sure we'll see some more reporting infrastructure over the next 2 years.
Okay. So. And sorry, just to clarify then, the 10,000, that was December 2022. If you were to repay that 10,000 of the 40,000 that you accessed, that would be forgivable. We're now knowing we're going to just set that tax aside, just in the event of the additional top up there. So if they access 60 and now it's 20, that is forgivable. Is that payment date also December 2022?
I believe it is. I have to check that, but that's it. But so I'm looking at 20. I guess all the incentives we talked about, we'll talk about, are all kind of planned on COVID being over. Right? And that's why we keep getting more new rules and perhaps better rules, because it keeps getting extended, because we thought we'd all be finished by now, but we're not finished. So that's it. So whatever we're discussing now, I'm sure will change in the next 6 months. Hopefully for the better.
Yes.
Or we'll start seeing programs ending. So
I think we have to do a whole other episode just on the future of our country and our deficit and how we're going to.
We got to pay for this. That's another whole other question. Yes. Okay.
Kids and grandkids are going to be paying for this.
Yes. Okay.
Okay. Just a question then on some of the provincial programs. I know that there are many entrepreneurs out there. This is where I've received a lot of questions. They've been able to access a number of programs that are really all about training. So it wasn't so much, working capital, but it was specific money that was there to help them and their employees just kind of up their game and get the right information needed. Any feedback on how we, do a tax application on those monies?
Yeah, well, I'm in Ontario here. So, and as an employer, we take advantage of some credits we have here, or tax incentives from the Ontario government with respect to co-ops we hire. And co-ops we hire from graduate to, once they finish school, we hire them as graduates, kind of thing. So they're not really related to COVID though. It's just there because they're there. Again, the governments want you to hire people, have faith in people in universities. So hire co-ops, hire interns, all that kind of stuff. So I think, I don't think they're directly COVID related. They're just there for your provincial, and it seems the provinces are much more aggressive on this. It's their belly work versus the federal government.
Okay.
So I think most provinces have, again, incentives for you to go out and hire a young student at a university. The government will kick in and help you with that salary. That's what they do, and of course that is taxable as well. So again, there's not often very much free money. Yes. Okay.
Yeah.
Okay.
I think that's an important message. I don't know how often you see this, Brian, but the money comes in. Oftentimes,
Yes.
if we can just get ourselves in the practice of just immediately setting it aside and
Yes. Okay.
some personal mistakes, right?
Yes.
And challenges
Okay.
with that and getting a bill at the end and, needing to go through a recovery process myself.
Yes. Okay.
So I love advocating. Just set it aside. If it's aside, you don't miss it, and then you're not going to get bitten at the end of the year, right? With this huge bill.
You're right. It's tough, especially but we go back to CERBs and things. You needed every penny you got, so it's hard to put.
Yeah.
If I told you your tax bill is going to be 20% on that, and you needed it to pay rent and buy groceries, it's tough. But we're trying to avoid the shock factor on April 30th. So.
Is the interest rate that CRA charges, is it the same for corporate tax as it is for personal tax?
It is. It's very expensive interest. Like today, it would be like $6, 6%.
6%.
Which I think, which right now is in terms of what you can get on a GIC or in a bank account, is very, very, very high. So you want to make sure you cover your CRA debts. Okay.
Get that done. Yeah. So in part 3, I'd like to talk a little bit about that too. Just prioritizing what you're getting paid off. First, second, third.
Good point. Yeah.
Anything that we need to talk about GST, or is it same game as always?
GST, we had an economic statement at the end of November with Justin Trudeau, and they put some extensions in as exceptions in as well. So for buying PPE and things like that, no big deals though in terms of changing the GST. But let's go back to COVID. We didn't really talk about CEWS, or the Canadian Emergency Wage Subsidy. Do you want to do that now?
Okay, let's do that. Absolutely.
So it's interesting. There was a deadline this January 31st, like a week ago, for periods 1 to 5 to file, to ask for the money. That goes back to day one of COVID, like mid-March last year kind of thing. So the government gave you all this time to file. And what we really found is many people hadn't filed. Many people had filed, first of all, but some hadn't. They were afraid of the it gets a bit numbersome, is that a word? With the calculations, but it really is worth it. So once you've gone through one period of reporting for CEWS, again, this is the idea of the government wants you to keep your employees on board. They'll help you with their wages and things like that. So it really is worth the effort to go through the numbers and calculate it. And once you've done one period, it just repeats the next period. So don't get say it's too complicated. I want the money, but I don't want to go through the hassle. It's not that bad. And actually CRA's website has templates to help you calculate decline in revenue, because the whole idea of the wage subsidy, if your revenue has gone down because of COVID, that's the first test, then the government will help out with your salaries you pay your employees. That's the idea of it. So don't be afraid of it, I think it would be my comment. And if you need help, there's certainly plenty of help out there, both on the government's website, and many accountants and things like that are quite familiar with it and have set up their own spreadsheets or copied the government spreadsheets to calculate this. So that's all I can say is don't be afraid of it. So
well, I think reaching out and getting the help if you do feel any intimidation towards this. And correct me if I'm wrong, it was my understanding too that once you actually did report for that first period, whatever was my understanding, there was 2 different approaches you could use to calculate what that subsidy would be. But once you went with that one model of calculation, you were then held to using that same
generally
model.
That's right. So it's how to calculate revenue, like what is your decline in revenue was the main question, and what periods it's based on versus looking back a year ago or looking back at January, February of 2020. How much? But that's right. They want really the word, I would say the word to summarize CEWS is consistency. And what's kind of replaced that is, or CEWS keeps going on. It's going on to this right now to the summer, to the end of June of this year, and hopefully it may be extended if we need to extend it. It'd be nice if we can cut it off and say we don't need it anymore, but we'll see. And then there's also the CERS, or Canadian Emergency Rent Subsidy, which works the exact same way as the CEWS. So you apply for it every period. And the whole idea of that is if you've had a revenue decline, the government will help you out with your rent for your business office, or the property tax if you own your business office. So that we don't want to miss those subsidies.
And so, sorry, so that's a really good point. I forgot to add that one here. The CERS, the Canadian Emergency Rent Subsidy.
Yeah.
Is it following the same period that your reporting on your employees is going to?
Yeah, it's the same periods. The periods are different numbers because this started just before the holiday season. The government changed their rental idea. We had one back in the summer, which you had to work with your landlord.
Right, I remember that.
Subsidy. This one's now just on your own. You and the government are just applying for it, but the same calculations as the CEWS. So once you've done that calculation, doing the rent calculation is very similar. So no big deal. So
okay. Can I ask you, this is off topic, on topic. I'm just curious about an accountant's fee structure on this support, because you know, your accountants are going outside of their norm. This is beyond just your annual tax return now.
Yes,
that you're preparing, right? What are you seeing, or what do you feel is kind of the standard fee structure now? Are accountants charging hourly for this extra support?
I think accountants are charging hourly, as they do for all engagements, pretty well.
Okay.
So to assess whether that accountant's fee is valid, I guess when you look at the benefit you're getting. So if you're getting less than the accountant's fee, then there's no benefit, kind of thing. So that's like anything, like a tax return is how much did my accountant save me, perhaps, but that's the thing. So but accountants should be able to quote up front, and once you develop a template for a client, it's very easy to replicate going to the current month as well.
So good questions to ask. I love the word that you have, numbersome, because this can be numbersome for a founder, especially you know, when a lot of them are in not so much triage mode now, but they are survival mode, right? Everything they can do. So trying to now add taxes on top of it. This is why your accountants.
That's a very good point you've made. Is many people are thinner now. They're less employees. Maybe that bookkeeper that came in every month is no longer coming in every month, kind of thing. So to calculate the CEWS or the CERS, first question is, what's your revenue this month? And they go, I don't know, because it hasn't been calculated, kind of thing. So that's the first question, is we have to compare revenue now to revenue a year ago. So we need those numbers. So there is actually perhaps more incentive to get that bookkeeper in quicker. So but you're right. And there's lots of lean shops out there right now. And when I ask questions about revenue and this, they go, it's perhaps another headache. But all I can say, it's worth it. It's money there. Both the CEWS and the CERS are taxable. So it is taxable money. So remember that.
You bring up an important point about the headache piece. And so, having been in this space for 30 years, it does feel uncomfortable for most founders to deal with money, but business is about money. If you're not making money, you won't be in business. So really, this is priority number one, to figure all of this out. And taxes aren't, they're not this evil. There's actually tons of incentives that are there. The government wants us to survive, right? So just doing the math, figuring it out, taking ownership of it, but having your accountant there who's got your back to help you navigate this space and make sure that everything that you can possibly do to support the business through this period is being implemented.
Exactly. Most entrepreneurs run around, I say, with their heads cut off, picking up. They want to find business, right? That's the idea.
Yes.
And so you either have to have your controller, your VP finance do this work for you. This, as you know, you want to have a good team.
Yes.
So the entrepreneurs, usually in the smaller businesses, have no desire to look at a piece of paper at all, or a spreadsheet. So that's why you hire somebody, whether it's internal or external, to run these numbers.
All right, Brian. So my big takeaways from this are that forgivable money is taxable. Whatever it decides, whatever the government decides is going to be forgivable, is going to be taxable. Watch the dividends you're paying yourself if you have actually received any of the emergency benefit programs out there for the business.
That's right. Or if you've increased your salary, probably should not increase your salary for 2020. Okay, or 2021. That would be my 2 cents worth. Don't increase your salary.
That's an important one. And then I'm just hearing on the CEWS, it's really about getting the reporting in and creating some ease of mind with that, and just getting that off of your plate. So get that started.
And since you've done a CERS, warp in next then the half hour is your CERS. So they're the same calculations. Okay.
Okay. Well, thank you again. This was part 2 of tax tips to navigating 2020 and the COVID benefits that we received. And then Brian's going to join us for part 3, where once we get our tax return in, I know we're going to be doing a little victory dance and some, deep breathing, but how to actually be proactive now about 2021 taxes so that we don't find ourselves kind of in this hornet's nest situation again, leading into tax return next year. So thank you, Brian. We'll see you in here for part 3.
Sure. Okay. Thank you.